The collapse of Silicon Valley Bank and Signature Bank is raising questions and concerns about the stability of the U.S. banking industry.
Yeah, and earlier trading in several regional banks was halted. However, President Biden says that depositors, people with money in the bank, can rest assured, his phrase, that their money and that the banking system overall, people with money in other banks, it's safe. And the president says that while federal regulators will make sure that those who deposited that money can access the money, the administration is not putting taxpayers on the hook for that money. Rather, the banks are going to be the ones that have paid into a fund.
Right. So joining us now to break this all down is Wall Street Journal economics reporter Andrew Ackerman. Andrew, thank you so much for being with us. Hindsight, of course, is 2020. But right about now, given what we saw happen back in 2008, I think a lot of folks are wondering, how did this happen?
I think a lot of people are thinking not necessarily just about 2008, but 2018. 2018 is when Congress passed a law that rolled back a lot of the protections we saw after 2008. And so it carved out regional banks, mid-sized banks like Silicon Valley Bank from a lot of the tougher rules that the largest banks face. And as a result, the argument goes, a lot of the problems were allowed to fester at the bank. And the examiners did not act on them quickly enough. And so by the time they tried to raise capital last week, it was too late.
So, Spencer, longtime reader, first-time interviewer of you. Thank you for being with us. I really appreciate it. And this is kind of technical, and you just touched on it there a little bit. But I'm just going to read this question straight off the sheet here. The banking system is built with compliance measures in place. So why were the people who were supposedly monitoring Silicon Valley Bank not able to see the problem and then step in before we had the run and the collapse?
It's a huge unanswered question we do not know the answer to. I mean, the management, to be clear, the management of the bank deserves a lot of the blame here. They had these they had a huge increase in overall depositors. I think they doubled in size in the space of a year. And then they took that money and they reached for yield. They bought longer term securities, mortgage-backed securities in particular. And they did that at the exact wrong moment as the Fed was raising interest rate. And those securities lost value, significant value. And as a result, when their depositors got really wary and started to withdraw their money, I think they were unable to or couldn't sell a lot of these securities absent a big loss. And so you were kind of left with this situation that was untenable. And for whatever reason, the examiners just did not pick up on this situation. And they didn't step in until it was too late.
So then what effect will all of this have on the Federal Reserve's announcement next week about interest rate hikes?
That's very unclear. I don't want to speculate. I mean, I think they're in this period where they're trying to raise rates to cool the economy. Typically, when you're in an environment like this with increasing rates, things can break. And that's what happened last week and over the weekend. And I think maybe even, it's not clear if we're out of this yet. We may be. Things might have stabilized, but the Fed may want to pause their interest rates for a bit to see the cumulative effects of all the rate raises, or they may continue at, the slower pace that they've been on.
So, Andrew, if it's possible to sum it all up and put it down to a single answer, the president says the banking system is safe. Is it?
I hope so. I think so. I think overall the banking system is safe, but what you're seeing right now is a lack of confidence in the business model for what are called regional banks. I mean, they're basically, in a lot of cases, they're just very large institutions, but they're not quite as big as the biggest banks in the world, like the JP Morgans. And what you're seeing, there was no bid for SVB yesterday. The FDIC tried to auction off the remains of this bank. They could not sell it. And I think that spooked people who are very wary of similarly situated banks, large regional banks with large groups of uninsured depositors, meaning people or businesses, they'll keep their money at these banks, but it's above the $250,000 federal insurance cap. And the problem with that group is they can run with the click of a mouse, and they do. They did in the instances of the two banks that closed. And so it's kind of, I think it's led a lot of people to question the viability of that business model. I mean, it could be wrong. Maybe they stabilize things by insuring all of the depositors at these institutions. Things might stabilize today. I think it remains to be seen if the administration has to take additional steps to kind of support the banking system.
All right, Andrew Ackerman, on what I'm sure is a busy reporting day for you there in Washington. You cover economics for the Wall Street Journal. We appreciate your time.
Thank you so much.